Good morning, all. Am I audible?
Yes, sir.
Yes, sir.
Thank you. Thank you. You guys, around 11 people have joined so far. We'll wait for this 2-3 minutes and then we'll get started. Okay, guys, I guess around 14 people have joined so far. So I'll just get started. And let us not waste more time here. Okay, it's already 9:50. Okay, so good morning, one and all, once again. Okay, today we're going to continue with the part which we started in the previous class. If you remember, we started with commercial banking. Okay, so we are going to continue with the same part today. Okay, so I'll be sharing my screen now. Okay. Okay, guys, is the screen visible to everyone?
Yes, sir.
Yes, sir.
Thank you, thank you, thank you. Okay, so we'll just get started with this. Okay, in the previous class, if you remember, okay, I'll just go to the previous slide. Okay, this is what we started with. Okay, the structure of commercial banking. Okay, what is the structure of commercial banking in India? So this is what we started with, and then we went on to the first part, that is public sector banks. Now, what are the public sector banks? The majority of the stake is held by the government of India. Okay, any bank which has a majority stake which is held by the government of India are called as public sector banks. Okay, we have studied that also. Then under public sector banks, we can consider two subdivisions. One is the State Bank of India, okay, and its group. Okay, now State Bank of India was formed in the year 1955. Okay, now there is a story behind it. Okay, in the year 1921, okay, uh, in the year 1921 there were three major banks in the country. Okay, one was the Bank of Madras, okay, another was Bank of Bombay, and another was Bank of Bengal. Okay, Madras, Bombay, and Bengal, these were the three banks. In the year 1921, these three banks came together. Okay, they merged basically, and they formed a bank called as the Imperial Bank of India. Okay, now, in the year 1955, this Imperial Bank was converted into State Bank of India under the State Bank of India Act. Okay, and that is how your State Bank of India was nationalized. Okay, and which comes under the public sector banks. Then the other groups, like we have already discussed, the State Bank of Mysore, State Bank of Hyderabad, State Bank of Bikaner, okay, and all other associate banks of State Bank, okay. So they were formed or they were nationalized in the year 1959. They were started in the year 1959, just 4 years after State Bank was initiated or the State Bank of India Act was passed. Okay, so this was a brief history about State Bank and its associate. Like State Bank, as I said, it was initially Imperial Bank, which was a combination of three banks, that is Bank of Bengal, Bank of Bombay, and Bank of Madras. Later converted into Imperial Bank, and in the year 1955 it was converted into State Bank of India. Whereas the associate banks, for example, State Bank of Mysore, Hyderabad, Bikaner, etc., etc., all these were a part of, they were nationalized or they were started in the year 1959. Okay, whereas the other nationalized banks, okay, like you have lots of nationalized banks which you can see in and around, like Union Bank, Syndicate Bank, Canara Bank, Bank of India, then the Bank of Baroda. Okay, all these banks, other banks, okay, especially there were 14 banks which were started in the year 1969. Out of all these banks that you can see right now, okay, 14 banks were started in the year 1969, whether the remaining 7 banks were started in the year 1980. Okay, so totally there were around 21 banks or the nationalized banks, okay, apart from the SBI and its group. Okay, there were 21 other nationalized banks which were there in the country. Now we have seen lots of mergers happening, and the list is brought down to around 15 to 16 now, which has been further which are been reduced to, it would be around 7 to 8 after the entire merger is completed. Okay, so initially when the other nationalized banks were there, there were around a list of 21 banks, nationalized banks, other than the State Bank and its group. Okay, so this was your public sector banks. So the major, what is public sector bank is where the banks in which the majority of the stake is held by the government of India. Okay, those are called as public sector banks. Whereas on the other hand, we have something called as private sector banks. Okay, before going ahead, can you name a few private sector banks? Can you name a few private sector banks?
ICICI,
Yes, Rohan, loudly please.
ICICI Bank,
ICICI,
HDFC is
okay.
there. SDFC.
You said HDFC?
Yes, sir.
Yeah, okay. Then,
Sir, Karnataka Bank.
yes.
Bank.
Any other banks? Somebody else?
Axis Bank,
Axis, yes.
South Indian Bank,
Okay, yeah, there are many, so right. Okay, so basically these are the banks which are where the majority of the stake is held by the general public or the management. Okay, where you can buy the shares of these companies, and majority of the stake is held by the general public in this case. Okay, then second one is, compared to State Bank of India or the other public sector banks, these banks have low capital base. When you comparatively, the capital base is very low. Okay, then the reach of the nationalized banks is huge. Like they have reached the nooks and corners, whereas the reach of these private banks is limited, because these banks set up their branches only where they get business. There is no restrictions as such on these particular banks that they have to go and set up their branches in remotest of the areas. Okay, so branches are limited. Then involved in various activities. They are not only involved in collecting the deposits and giving the loans, but they are also involved in various other activities like investment activities, insurance activities, mutual funds. Okay, then currency trading, then bills discounting, and issuing of letter of credits. All these things are the major activities, are the activities which the private banks also undertake apart from their regular lending and deposit activities. Okay, then why private banks are more successful is because of the technology that they use. Okay, so most of the private sector banks use high end technologies. Okay guys, just hold on for a second. Okay, okay, before I continue guys, there is a small notice Okay, please make a note of this. Vaibhav Badgi sir would be engaging the investment management class from 11:30 to 12:15. Okay, 11:30 Vaibhav sir would be engaging his class instead of DGK sir's class, which is retail management, which is scheduled on at 11:30. uh, Vaibhav Badgi sir would be engaging investment management class at 11:30. Am I clear on this, guys?
Yes, sir. Yes, sir.
Okay, okay, fine. Okay, yes. So next is basically involved in various activities. The most important thing about private banks is they use high technologies. Okay, if you see lots of, if you compare the various banks, okay, you find that these private banks are more technologically sound than the other private sector, other public sector banks, right? So high use of high end of technologies and all those things are the main features of private sector banks. Okay, next is NPAs are lower. Why NPAs are lower is because here the norms are very stringent. Getting a loan in ICICI Bank, the norms are very stringent and their collection policy is also very strict. Okay, so you find that there are low NPAs as compared to the public sector banks, because public sector banks, it's under the government control, and government sometimes ask the banks to give loans. Even if there is no guarantee of collection of those loans, they still ask the banks to provide loans to a particular segment of the society, right? So that is and if that particular segment of the society cannot pay the loan or cannot repay the loan, then they become NPAs. Okay, so the NPAs in cases of public sector banks is comparatively much higher than in case of private sector banks. And most of the private sector banks uses the term limited in their name. Okay, if you see ICICI Bank Limited, HDFC Bank Limited, IDBI Bank Limited. Okay, so they use this word limited. Okay, and that means that they are private sector banks, because when you talk about limited, means they are the shares of that particular company, or the majority of the stake of that company is with the general public. Okay, so that is why they are called as limited companies or limited private sector banks. Okay, so I hope you're clear with what is private sector banks and what is the difference between public sector and private sector. Yes, okay, great. Okay, fine. So guys, I want you to do a small exercise now immediately. Okay, I'll keep this slide as it is. I want you to come up with some differences between public sector banks and private sector banks. One by one, give me the differences between public sector banks and private sector banks. I have already explained you this. I want you to give away that answer. What is the difference between public sector banks and private sector banks? Okay, the first one.
The
Yes,
so
Kanal.
the majority of the stocks are with government for public, and for private is done by the general public.
Very nice. Good. Good. Second, somebody else? Quickly,
So
guys.
public sector banks, they don't use limited, but the private sector banks, they use limited word.
Very good. Very good. Yes, they use the word limited, whereas public sector banks do not use the word limited. Very good. Rohin?
So, sir, the public sector banks have widespread of branches,
Okay. Yes, they have.
whereas
Correct.
yes, sir,
Correct.
and whereas private sector banks has are limited, branches are limited in.
The branches are limited. Very good. Okay. Next.
So in private sector bank, they use the technology,
Yes, they
high use of
make use of
technology,
high-end technology, whereas public sector banks lack
well,
in
public sector
use of technology. Good. Good.
technology.
Very good. Next.
So in public sector bank, loans are being given for the like the non-performing assets also, sir. But in private sector bank, they don't. The rules are very stringent.
Okay, okay. Now, Preeti, understand one thing. Your answer is right. I'm not denying that your answer is wrong. But I always understand you cannot say that in public sector banks, loans are given to NPAs. Right?
Okay, sir. Okay, sir.
Okay, Preeti, come in the video mode.
Yes, sir.
Come in the video. Those who are asking questions, guys, try to come in the video mode so that there is a proper interaction. Okay, because it's really annoying when I speak to the system. Okay, understand one thing, Preeti. What is NPA? First of all, you can keep your audio open. You can keep unmute your audio. Yeah.
The non-performing asset.
Non-performing assets, right? Now, can you give
Yes.
loan to non-performing assets? As you said,
So you said that in public sector bank there's some rules and regulation where they can give loans to non-performing assets
they
also.
don't give loans to non-performing assets. Most of the assets where they give loans become non-performing. They tend to become non-performing. What is the meaning of
Okay.
non-performing is, okay, when you give a loan to someone, okay, suppose you have given loans to farmers and those farmers are not able to pay the loans, agriculture loans, they are not able to pay those loans, okay,
Yes.
particular period of time, then they are converted into NPAs. You never give loans to NPAs.
Okay.
Okay. Okay.
Yes.
Do you buy a rotten apple?
No.
No, right? But if you keep it for more period of time, what will happen?
It gets rotten.
Correct. Okay. But that doesn't mean that you go and buy a rotten apple,
Yes.
right? In the similar way, NPAs are the loans which are not paid. Loans which are not paid for a particular period of time, more than 3 years, if there is no payment at all on those particular loans, those loans get converted into NPAs. See, loans are assets to a bank and they perform
Yes.
means what? You're generating revenues from those particular
Revenue.
loans, right? You're getting interest from
Yes.
those loans. That means they are performing assets. And when they stop performing, that means you're not receiving any repayment from those particular loans. They become non-performing.
Okay.
Okay. So
Yes.
your answer should be there are more non-performing assets in terms of public sector banks. In case of public sector banks, there are more number of the non-performing assets are at a higher end, whereas in case of private sector banks, the non-performing assets are at a lower end.
Lower rate.
Correct? Okay.
Yes, sir.
Yes. Anyone else? Okay, fine. So most of you have given this particular difference between, I guess you have almost given around 7 differences between the private sector banks and the public sector banks. Okay, so that means I hope you're clear with what are public sector banks, what are private sector banks, and you know the differences also. Okay, so let's go ahead with the next part, that is the regional rural bank. Okay, now the name itself suggests these are rural banks. Okay, and each banks are basically governed by that particular state government. Okay, so the sponsorship depends on the state government, or normally they are sponsored by a scheduled commercial bank. Okay, I'll come to that later. Fine. First of all, regional rural banks means these are banks for rural areas to support the development of the rural areas. Okay, so these banks were formed in the year 1976 under the RRB Act, that is the Regional Rural Bank Act was passed in the year 1976, and then these regional rural banks were formulated or they were incorporated. Now, why were they done? What was the reason to do it? The reason was rural inclusion. Now, can somebody tell me what is this rural inclusion? What is rural inclusion?
Providing banking services to the rural areas.
Providing financial facilities to the rural areas, or in other words, including the rural areas into the entire financial sector. Okay, because they were left out. Okay, this was the suggestion by the Narsimhan committee, that there is the rural areas are been totally left out from the from the reach of the banks. Okay, and that is the reason why RRBs were formulated, to include the rural areas into the entire banking system. That is what Swapnil also said, like starting up branches in rural areas, or the people in the rural areas should get access to the financial system or to the banks. That is the reason why these RRBs were formulated. Okay, now what are the features of RRBs is, okay, first one is sponsorship. Now what do I mean by sponsorship here is, every regional rural bank is sponsored by a commercial bank. Okay, every regional rural bank is sponsored by a commercial bank. Now, commercial banks, scheduled commercial banks means it may be sponsored by State Bank of India, it may be sponsored by Bank of India, it may be sponsored by ICICI, it may be sponsored by HDFC, anyone. Okay, it depends. Now, who has sponsored a particular regional rural bank? Okay, so first feature of regional rural bank is they are not independent, they are sponsored by a scheduled commercial bank. Second one is its jurisdiction. Now, jurisdiction means the area that it covers. Okay, normally the area that it covers is around maybe 20,000 people, okay, is what has been recorded. Okay, around the area of that a particular regional rural bank covers is around 20,000 people. Okay, so in and around that area consists of 20,000 people. So that is what the service area of that particular regional rural bank is. Okay, then coming to the share capital, around 25 lakhs of share capital is what has been specified. Okay, which is again sponsored in the ratio of the central government, the state government, and the sponsoring bank. Okay, in the ratio of 50 is to 15 is to 35. Remember this ratio. The ratio is 50 is to 30 15 15 is to 35. Okay, so 50% is sponsored by the central government, then 15% 15% is sponsored by the state government, and 35% is sponsored by the sponsoring bank. So that is how the capital is built up. So around 25 lakhs of capital is what is required. 1 crore, okay, has been fixed to 1 crore and issued capital of around 25 lakhs, and it is shared in the ratio of 50 is to 15 is to 35 amongst the central government, the state government, and the sponsoring bank. So that is what the share capital consists of. Now, what is the function? You tell me the functions of regional rural banks. I need not tell you this because you have been studying banking and you know what is banking now. So can somebody tell me what are the functions of regional rural banks?
So providing agricultural loans,
Very nice. Yes, providing
housing
agricultural
loans,
loans. Then,
housing loans.
okay. See, basically, these banks are set up to support, okay, small people, small entrepreneurs, laborers, marginal laborers, or farm workers with loan facility. Okay, that is what their functions are. Okay, to provide loans to the people in the rural areas, basically to marginal laborers, agricultural marginal farmers or agricultural laborers or small entrepreneurs. Okay, or maybe, yeah, sometimes there are artisans also, like those who make pots, those who for weaving of clothes and all those things. For all such reasons, loans are given, small loans are given, and that is the main function of any RRB, providing loans to the needy people in the rural areas. And next is the interest rate. Basically, interest rate is normally lesser than what is the commercial rate given by all other commercial banks. Okay, and it depends on the, now I cannot just tell you what is the rate as such, but it is normally, let's say, 5 basic point less than the normal rate. Suppose the normal rate is, let's say, around 9.5%, then the regional rural bank give the same loan at 9%. Okay, 0.5 is the 5 basis point is nothing, 50 basis point is nothing but 0.5. Okay, so that is how the interest rates are decided. So these are the main features of regional rural banks coming with sponsorship. As I said, they are sponsored by scheduled commercial banks. Jurisdiction is around an area of, let's say, 50 kilometers to 60 kilometers, and with a population of around 20,000 people, let's say. Okay, then the share capital is from 1 crore, 1 crore is the authorized capital, to 25 lakhs of issued capital, which is shared amongst three parties. That is the central government with 50% stake, then the state government with 15% stake, and the sponsoring banks with 35% stake. Okay, then coming to the functions, the main function of these banks is providing loan facilities to the small laborers, okay, marginal farmers, agricultural laborers, or for fertilizers, your crop loans and all those things, as well as for artisans and for your small entrepreneurs in the rural areas. Then coming to the rate of interest charge is comparatively lesser than what is charged by other commercial banks in other areas. Okay, as I said, around 50 basis point. Okay, so it is around 0.5% less than the normal interest rate. Okay, so this is how it is. These regional rural banks work, and the most important thing about this regional rural banks is, can somebody tell me what I'm looking, what is the main reason? Okay, we have studied this in various slides before. The main reason, regional.
Provide facilities, rural areas.
No, I'm looking for a particular word that I have used many a times in these classes. Okay, the word that I'm looking for here is balanced regional development. Okay, again, when we talk about all these things, the main reason for setting up all these regional rural banks is balanced regional development. Okay, so that is the main reason. Okay, so I hope you're clear with this regional rural banks. Any doubts in
Yes,
regional
sir.
rural banks? Okay, so far we have completed public sector banks, private sector banks, and regional rural banks. Is there any doubt about anything that we have dealt so far? Yes, no? Okay, let's move on to the next part, that is foreign banks. Now the word itself says it's foreign banks. That means why they are called as foreign banks is because the origin is foreign country. Okay, then head office situated outside India. Okay, the head office of these banks are situated outside India. Then earlier they were referred to as exchange banks. They were called as exchange banks. And most prominent banks, foreign banks in India is the Standard Chartered banks. You will be surprised to know that Standard Chartered banks is in India from the year 1858. From 1858, it has its branches in India. Then Citibank from 1902 and HSBC from 1953. So these are the most prominent foreign banks which are operating in India. Can somebody tell me what is HSBC? What is HSBC?
So Shanghai Corporation something.
Okay, partly right. Anyone?
So,
HSBC?
but Shanghai.
Come on, guys. HSBC. At least you have heard about HSBC, I guess.
Yes, sir.
Okay. So can somebody tell me what is HSBC? Please do not search in the internet. It's very easy to get it from the internet. And that is the reason why I ask you to be on the video mode so that I can observe your movements. So anyone? HSBC? Ashwini? Ashwini? Gautami?
Searching. No, sir.
No, Rashmi?
So Hong Kong and Shanghai Banking Corporation.
Very good. You knew it or you searched it?
I knew it.
Very nice. So why were you keeping quiet? The question was pretty simple. Okay, it is
Yes, sir.
Hong Kong and Shanghai Banking Corporation. Okay, so again, it started its operation in India in the year 1953. So if you see, most of these banks were there in India before even you had your nationalized banks, other nationalized banks. Because if you see the other nationalized banks, it's around 1969 to 70, whereas these banks are already there before even two banks before independence, right? So that is what foreign banks are all about. The main important thing about foreign banks is they are from a different origin. Okay, and the head offices are situated outside India. Okay, now apart from these three banks like Standard Chartered, Citibanks, and HSBC, Can you name a few other foreign banks in India?
Sir, Dutse Bank is there, sir. Dutse something.
Deutsche Bank.
Yes, sir. Then
Deutsche.
Scotland one is there, sir.
Yeah.
Scotland.
Yes. Yes. Then
Australia New Zealand Bank, sir.
Australia New Zealand Bank. Very good. Then any other bank? Yes. Is any other foreign banks in India? You stated, okay, Deutsche Bank, Australia New Zealand Bank. Any other bank?
Bank of
Sorry, Narayan, I did not get you.
Sir, Bank of America.
Bank of America, is it there in India?
Yes, sir. I just googled it.
I'm not aware. I have to check now. Bank of America, I don't think it's there in India. Okay, fine. I'll just check it out. I'll just confirm that. Okay. If somebody has messaged. Citibank is already, Rohit, it's there on the slide itself, Citibank. Right? Okay, fine. So, try to find out some list of foreign banks in India, okay, so that you can get a rough idea as to what are the various banks which are there, which are already there in India, okay. Next, coming to the next part, okay, the next part which we have already studied many a times. Okay, yes, the next part is the functions of commercial banks. Okay, now this part is what we have dealt before also, because when we dealt with the functions of RBI, okay, then we also studied in brief the functions of commercial banks. So let's just quickly go through this particular slide, since we are left with around 6.5 minutes. Okay, so I'll just complete this particular slide and then we can stop the class for today. Okay, next one is functions for commercial banks. Now again, functions of commercial banks can be divided into two parts, that is the primary functions and the secondary functions. Under primary functions, we know deposits is one of the most primary function of any bank, any commercial bank. Now deposits, when I talk about deposits, okay, there are different types of deposit that a bank accepts. Okay, I want answers from you. What are the different types of deposits that a bank accepts? Quickly.
Sir, fixed deposit.
Fixed deposit.
Current
Yes.
deposit.
Sorry.
Current deposit.
Current deposit. Very good.
Recurring deposit.
Recurring deposit. Very nice.
Recurring.
Sorry. Okay. See, basically
Recurring deposit.
basically, yes, basically there are three types of deposit. One is called as term deposit, under which you have your fixed deposit and recurring deposit. Okay, these are called as term deposit. Second one is your current deposit or current accounts, and third one is your savings accounts. Okay, so these are the three types of accounts, and under the first type, that is your term deposits, we have the fixed deposits and your recurring deposits. Clear with that? Okay, whereas when it comes to advances, okay guys, start. Advances, different types of advances. Quickly.
Loans.
Yes.
Loans, sir.
Loan is nothing but advances. Who said that?
Sir, I said
Credit.
advance.
Yes.
Cash credit, sir.
Cash credit is one. Very good.
Overdraft, sir. Overdraft.
Overdraft is another. Very good.
So gold loans.
Okay. Gold loan. Then
So discounting of bills.
discounting of bills. Very nice. Yes. Discounting of bills.
Money at call, sir.
Yes. Is this Priyanka?
Yes, sir.
Okay. Money at call. Can you tell me what is this money at call? Don't read
Yeah,
and tell me.
in banks, sir, loan. Hello, sir.
Sorry. Yeah, tell me.
In banks, sir, loan will be given only for small days, sir. 10 days.
Correct, correct. The time period is very short in case of money at call. Whenever the call is made, you have to repay the loan. That is money at call. Okay. Then
Consumer credit, sir.
consumer credit, yes. Okay. So the different types of loans given by
Miscellaneous advance.
commercial banks are: first one is your overdraft facility, cash credit facility, bills discounting, money at call. Then term loans. Under term loans we have the mortgage, hypothecation, then your lien, okay, lien loan, etc., etc. Then we have consumer credit facility also, that is the facility to buy electronic equipments and all those things, that is your washing machine, TV, fridge, etc. Whatever you buy, that is through a consumer credit, okay, or consumer loans. Fine. So these are the different types of loans that are provided by commercial banks. Next one is creation of credit. Now creation of credit is basically investing. Okay, this talks about your investment activities, so investment in funds, then promoting of use of checks. Okay, then internal so basically when we talk about creation of credit, you basically are investing into various types of avenues like shares maybe, or you may be investing into bonds. Okay, and you are trying to create credit for other people. Okay, so that is what creation of credit talks about. The creation of money, basically creation of money for by investing whatever the banks have. Banks invest it somewhere, and that creates finance for other people, or the commercial startups or setups. Okay, so that is what creation of credit is. Then financing trade is providing loans to the for trading purposes. Okay, so that is what financing trade is. Now trade does not only include internal trade, but it also includes the foreign trade. Okay, so through letter of credit, now through letter of credit, commercial banks also provide or promote foreign trade. Okay, so that is what financing trade talks about. You're financing the import of goods. Okay, so that is what financing trade is. So trading can be internal or external, so it depends on that. And last one is remittance of funds. Now remittance of funds is basically transferring of funds from one bank to another bank. Okay, your NEFT, RTGS and all those things, those come under remittance of funds. Okay, so these are the primary functions of commercial banks. Guys, we are left with less than a minute, so I'll not go with the secondary functions right now. Okay, I hope you're clear with the primary functions, very basic, and we have discussed a lot about this. So the class might end at any moment. If you have any doubts, quickly ask those doubts. Any doubts, anyone? No? If you're clear, please give a thumbs up. Okay, guys, great. So I hope everybody is